Is Bitcoin about to plummet? If you are interested in this question, please follow me. From the perspective of the weekly line, we can open the RSI chart. And we can find that if we are based on divergence and not based on overbought and oversold, we can firmly grasp it. In this round of bulls and bears, we can basically grasp the big top and bottom several times. You can see the top of the arc that we formed before 519. It has continuously produced multiple divergences, and it didn't happen at the beginning of the rise. I think it's perfect. It's when we're actually going up in the late stage of the rise. When we're about to fall at the end, it produces a divergence from the top. And then includes us and then produces a top, which is clearly released. The divergence signal. In fact, the top divergence can indicate that the strength of our subsequent rise is not as strong as before. Of course, RSI measures the proportion of its rise in all fluctuations. You can see the place behind us. Basically at the very bottom position. If we look at the current market, if the bottom is at 15,000 or even 19,000 to 18,000, it is considered a very, very good spot entry price. You can find that we have a bottom signal at that time. It produced a divergence at the bottom. And you can see that now it has produced another weekly level. In fact, the weekly line is really a large level. And the weekly line usually produces effects that can last for a long time. You can see what we have seen before. The resulting divergence can lead to such a large wave of declines. And the bottom divergence we have generated can lead to a wave of large-scale rises. Now we have come out of a top divergence. So we can find that our current indicators, it can be seen that the strength of our rise is definitely weakening. You can find that our follow-up is basically at the very top of this position. And there is also a signal of top divergence. If you want this indicator, you are very welcome to join my Discord community. The group and the assistants can get this indicator for free. Let's take a look at it again. In fact, we have a line that has not been broken in the past from the weekly line. We start from the bottom of the previous bear market and continue to draw. At the bottom of our current bear market, you can find that the past few contact points, including the drop at 312 at this position, did not close the entity below this trend line. But if we take the entity part, it is the part that can be connected is only the tip of the needle. And then we made contact at this position. I think this line is effective. At least we look at this line from the perimeter. I think it can as a reference. If we fall back to the trend line, it will be about 20,000 to 22,000. In fact, I also think that our decline this time is probably the lowest. I think the lowest is more than 19,000, which is very close to 20,000. If we go up a little bit, we may get to around 22,000, which means that it falls within our previous shock range. I think this is already the limit. Because if we look down, we will come to the bottom of our bear market is probably between 15,000 and 16,000, which is very unreasonable. If our price can return to the range of 15,000 to 16,000 below us, it means that we have risen ahead. This wave of rise is completely false. Otherwise, it is impossible for the price to return to this range in the middle. And I think if the price returns to the position of 15,000 to 18,000, then we are very, very likely, maybe we will hit a new low point. If we look at the current time period and if we can still hit a new low point, then our next round of bull market, which is the halving period of 2024. Will the bullish market come again? It's hard to say. So how do you judge it? In fact, you can see that basically our rise is relatively smooth in 3 stages. The first stage is in the front. Here is the second stage. And here it is the third stage. So you can see that our first period of decline is basically within the corresponding price range. And it has produced such a very fast movement. If we break through 25,000 next, if we correspond to the previous, I believe it will also have a very rapid decline. Because there is no accumulation of chips among us. If we reach around 20,000 to 22,000, I actually think it is almost the same. If we go further down, it can be seen that there is no amount of accumulation in front of us. And when we fall, it will fall very, very fast, just like before. And it will hit a very far distance. If we look at this market situation, wow, if we will return to the bottom, we will not be able to guarantee that the low point we created earlier is about $15,500. Is it really the lowest point of this round of bear market? So I think our decline is basically it's already at the limit at around 20,000 to 22,000. If we go further down, I think it will disrupt our next bull market cycle. Let's lower the level and cut it smaller. We cut to the daily line. In fact, we look at it from the daily line. The market is also going very badly. At this time, some people may ask whether our market will have a relatively large rebound after hitting 25,000. Or in other words, this kind of continuous demand and then rapid increase is of course undeniable that there was indeed an impact from the news at the time. But we can also draw this conclusion from the technical side. That is, you can look at 20,000 and it is very clear that it is a swap. If we pull it to the front, we can pull this line a little further forward, and you can find that this line has always played interchangeable roles, including this place, then the back here, the back here. Of course, when we stepped on it for the first time, it's no problem to step on it as a support. But the efficiency of the support will change with the number of times we touch it, and it will gradually weaken. It's a bit like our previous 25,000. It was a very strong resistance. So why did it break in the end? It is because we have tested many times in a row. Especially as you can see that our continuous test in this position in a short period of time can indicate that the supply here has been exhausted, and our current disk has come into contact with 20,000, about $5,000 can be compared with the previous one. I think there is still some support for about $25,000. Otherwise we can't stay in this position for so long. You can see that we are basically close here. But with these two times, the situation of its fall is completely different. Let's compare the situation of its fall at that time with our current stage from the new high point to the current K line. In fact, we were in the previous frame at the time. When we came to test 25,000 once, what was our market price at that time? What does it mean is relatively strong? You can see that our decline did not come down directly. We have experienced many deep rebounds among us. You can see that after the decline, there was a deep rebound. And after the fall, there was a deep rebound, and then it just fell. In fact, it is the first time to touch the 25,000 drop. In fact, it still has a lot of demand. Or there are still people who are buying, some people want to buy. Or some people want to do more. You can see our current disk. You can find that when the price falls back, it gradually hits lower lows and lower highs. And then it explodes. After the explosion, it does have news at this position. After the bullish boom, it didn't last for too long. In the next 2 days, we directly swallowed the gains from the previous news. For a little bit of demand, we should all be at a relatively high position. For example, around 28,000. Hold on for a little longer. And stay at this position for a little longer. But we are immediately broken down and come back immediately. Which means that we are here. In fact, the demand is really, it has already been exhausted. If it weren't for the news, I believe that the pullback would have rebounded. And it would not have been pulled so high. So you can see that we will test the market at 25,000 again later. It is much, much weaker than the previous one. Regardless of the height of the rebound and the speed of the decline, the volume of the decline and the shortening of the time. When it is immediately pressed back after the rebound, we can think that we are actually behind. When we first came into contact with 25,000, we were more vulnerable. This is what we can read from the board. Then we cut the level down a little bit and cut it to 4 hours. In fact, 4 hours is good. Let's take a look at 4 hours. Let's take a look at these K lines. Although we have classified them as oscillating these days, I think there is no problem. But we are oscillating. It is oscillating and falling. You can see that we are in this position. But it is okay. In the latter position, you can find that its real part is constantly moving the range to a lower place. Or we can use a more intuitive way to see the closing of our 4-hour K lines. In other words, the real part of the K line is constantly creating new lows, which is definitely not a good thing for the bulls, and let's take a look. In fact, the position we are at the bottom is probably at the previous low point, which is where we inserted the pin after we fell. The spot contract that hits the low is deeper as you can see here. We tested the first test, the second bounce. No problem. Test the third bounce. No problem. Test the fourth time. After closing the long needle. Basically back to the original position. So you can find that basically the strength of our rebound is getting weaker and weaker. And we have tested the previous low of the pinpoint of this position 4 times. If we continue to remain weak and come back to test 25,000, I think we will in the future, it will become more and more likely to break down as time goes on. Even if we break down again every few days, I won't be surprised. Even if it breaks now. Well, let's take a look at our current position. The pattern we came out of is a descending triangle. The information we can read is that the height of the rebound has decreased after we hit the support. And this kind of triangle is usually a continuation pattern, that is, a relay pattern. How did we get in? How it usually goes out, so you can see how. We come in like this before the relay pattern, and then usually that's how we go out. We have a very, very good example, and we were also on a very important key support at the time. Of course, this example, it's personally very impressed at the daily level. If we switch to a smaller level at the 4-hour level, you can find that we were in this position at that time, and it also produced a descending triangle that is very similar to our current one. Then, as the height of our rebound decreased, we broke directly. I think we are very likely to get out of this market. Thank you very much. If you want to participate in these trading opportunities, you just click the link below. New user KYC deposit $100 will give you $25 in cash. Of course, we will give you the cash at the end of the month. You can withdraw the cash and leave. You don't need to do any transactions at all. You just need to put $100 in and you have KYC. It will send $25 in cash to your account. Then you can withdraw the coins directly. It's completely free. The cash doesn't need to be traded. It doesn't matter at all. You are very welcome. You can subscribe to my channel. Press like, share the cryptocurrency market, and continue to be time sensitive. You don't want to miss the next trading opportunity. Please press the subscribe button and turn on the little bell to join YouTube's most profitable Bitcoin Chinese channel. Thank you everyone. Bye bye.